In this video, traders, we're going to answer the question, why do strong stocks often close at highs? Might seem obvious, but let's dig into it. Hey traders, a very warm welcome to you. So, when you're trading stocks, or in fact, any strong market, why does it often close at highs? Now, this might seem like the most obvious thing ever, hey, it's strong, it's going to close at highs, but let's dig into it and let's see exactly why this happens so that we can perhaps stay one step ahead, and if we have missed it or if we're involved in it, we can maximize our returns from trading this strong stock phenomenon. Right. So this is generally, I'm being kind of generalizing here, but this is kind of the pattern we'll get with a strong market or strong stock, right? We have a open here and then we'll drive up during the first hour quite aggressively. We might have different kind of pullbacks and stuff, but the supply demand imbalance will be obviously in the demand side, on the side of the demand, pushing. You'll get a counter trend move, the first kind of pullback, first bigger pullback. It will start to get bought because it's strong. It's just a counter trend move against the direction, and we'll break out, we'll push the highs. Then around kind of lunchtime, late afternoon, we're talking about stocks here, you'll start to maybe hold just off the highs, right? You'll have made a high, a peak here, and then you'll start to hold just off the highs. Your VWAP will be way away from price. Your moving averages will start to kind of catch up with price. I won't draw it on there because it will clutter up the screen too much. So, and then generally in the last hour or so, you get a late burst and we end up closing right at the highs. Now, I mean, obviously I've generalized here, but this pattern occurs over and over and over again, that it's very, very tradable pattern. Okay. The way we trade this is we look for an opening drive. If we don't get the opening drive, we look for the first pullback. Even if we don't do any of that, and let's say we're trading and we're just scanning for this specific pattern, we can come in, we've got all the time in the world. Have I got my, let me take an orange pen. We've got all the time in the world to come in and scan for this pattern that happens on this side of the trade, i.e. we're close to highs. That's a good drive percentage wise. Maybe there's good volume if you want to add that. We're holding just off highs and we've been stagnating because it's an acceptance of price. Now, what happens is we trade for a long position for a drive into the close. Now, sometimes you might get a little dip down just to kind of test the water before we rip up, but ultimately that's what we're looking for. So if we can filter for these, and obviously we can flip on its head for weak as well, if we can filter for these, we can trade this aggressive move into the close. But the point of the video is why? Why do strong stocks often close at highs? The reason, guys, is this. If it's strong and we have a supply-demand imbalance, i.e. we've got a lot of demand coming in, pushing stuff up, a little occasional dip of supply, but ultimately demand, indicated by the trend, indicated by the sloping VWAP, indicated by the moving averages sloping up aggressively. We have a scenario where people are accumulating stock. They're buying. When you get to this point here, algos and institutions and people will be backing off because generally volume will dip down during that lunchtime period. Okay, they will have resting orders. If I kind of see if I can do this, if I'll just say that, let's zoom into here, they will have resting orders kind of stacked up below the market. So as the market comes down, you know, we start hitting these orders, which is why it doesn't go anywhere, because it holds at highs. Because when little bits of selling comes in, they sit these orders, maybe that order then moves to there, it goes down a little bit lower, but the point is there's that solid undercurrent of demand. Like the demand's sitting there, they don't want to get too aggressive because volume's going low and they're trying to be a proportion of volume. They don't want to overpay for it either. This VWAP's coming up to meet them and want to try and get more of a mean price over the whole day. So this is why we get this stagnation here, and there's not enough selling to push through those resting buyers, and they're not prepared to get too aggressive yet. So that's why you get the stagnation just off the highs normally. Okay, so why do we get the drive into the close? We get the drive into the close because all these guys who are stacked up on that bid under there, resting the bids now, see the last hour, the last 30 minutes, whatever time period it is, see the fact that, hey, the VWAP has pushed up now, moving averages has pushed up. They've got two things they're looking at. One is they need to get that order done. Don't forget, you know, you and I are just buying kind of 5,000 shares here are not the guys who are moving. It's the guys who are buying a lot of shares over a period of 1 day, 2 day, 3 days, whatever it is, a big batch and multiple kinds of those guys, they then say, you know what, I need to get more done. I need to get X amount of shares done today. I've only done 2/3 of it. Now I need to start getting aggressive. Everyone sees the bell as a kind of end point. And so you get these guys now starting to step up. They step up, they start hitting offers. Okay, and because we've got the supply demand imbalance anyway, then all you've got is a one-way street, because all these guys are now hitting offers, hitting offers, hitting offers. One, because they haven't been filled, and two, because price is now closer to the mean than it was before. So you've got the time kind of constraint on you there with the close, and you've got a better price related to the mean because the moving average has caught up with it as this trade has brought the VWAP and the moving average up. Then you see the buyers getting more aggressive, more aggressive, more aggressive. And of course, when you've got a unison of buyers pushing, that's when you get that aggressive push into the close. So keeping an eye out for that kind of pattern is quite lucrative because of that exact nature. Now, does it work all the time? Of course it doesn't. Does it work the majority of the time? This is a good one. This is definitely one to have in your trading setups. To drive up strong, identify strong, whatever you do with this to identify strong, and trading that last hour, squeeze into highs. In fact, if you really want to be clinical about it, you can wait until it breaks the daily high, take a stop there, use like a 1 period at one ATR or your highest 5-minute candle or something like that. Be very general with it. Here's your stop loss, and then just kind of ratchet that up as it goes, as it goes, as it goes, exit at close. Very simple strategy, very easy to kind of filter for and execute, but very, very powerful. Probability of success is quite high, and the risk reward ratio is kind of undefined sometimes because you may not get a complete rip, but when you do, you get a decent risk reward ratio as well. All right, guys, that's the why do strong stocks often close at highs. Thoughts in the comment section below. If you enjoyed it, thumbs up appreciated. Take care. See you in the next one. Bye bye.